Good morning. My name is Adam Cotton. I'm the Rational Investor. Hope everybody's doing well. Welcome back to another video by me. Um, Today is Tuesday, January 9th. Today I'm going to talk a little bit about a covered call strategy you guys might want to try implementing. See what you think about it. Hopefully it helps you to maximize some gains and maybe get some dividend payments from using the calls. So stick around for the video and we'll get into that. And I'm also going to talk a little bit about some of the gloom and doomers out there. So I hope everyone's doing well. I'm really excited to be back outside and it not be freezing. I took yesterday off because it was so cold, and the other days were so cold out here too, which, I moved to Vegas because of the warm weather. So when it gets real cold, I get a little frustrated with it. Been here since '05. I'm like that guy who walks around in shorts even when it's cold because I'm so stubborn about, well, if I move to a warm place, that's why I moved here. So anyway, before I get into the video where I talk about some covered call strategies and how you might be able to implement it even if you're not like a trader, if you haven't already, if you could do me a favor and hit that subscribe button, maybe even hit the like button as well. I really appreciate the support. That helps YouTube's algorithm. It helps other people find the channel. And if you guys are enjoying the content, that helps them to find it as well. And it's awesome. I can't tell you how thankful I am and how appreciative I am about how much the channel's growing already. It's super cool. It's not what I expected. I really just get on here because I like markets and I like talking about this stuff. So let's talk about a covered call strategy. But before I do, let me give a little disclosure. This is not financial advice. Don't take my advice. You guys need to make your own decisions when making any financial decisions. And if you use a financial planner, by all means, reach out to them. This is just entertainment value. This is the things that I found work for me. I'm just a guy on YouTube. And honestly, not just me, really, you shouldn't be listening to any of us other than if it fits what you need and if it works for the things that you decide for yourselves. Like, you have to trust your own decisions and can't listen to some YouTube guys. So what I want to talk about is a way to use call options not as traders, but as a longer term type of investment to be able to either increase your dividends or turn stocks that don't give dividends into a dividend stock. And I'm going to use one that I did today and one that I did maybe a month ago or so as examples of ideas that might help you with what I'm talking about to understand how it works. Now, if you don't understand what a call option is, essentially it's a bet on a stock and its stock price going higher. If somebody's buying a call option, they're making the bet that they think the stock is going higher. If they're selling a call option, they're committing to selling the stock at whatever the strike price is on the date of expiration. So the way that I'll use a stock option is I'll take a company I want to own. And the one I did today was Google. Now, I have Google in, for those of you who know, I have my three different accounts, the ones that I put in the safe deposit box. I have Google in there. Then I have a different account that I use primarily just for dividends that I'll take those dividend checks and whether I use them or reinvest them, maybe they pay some bills or whatever they are. And then I have a third account that I use for trading that's smaller and just kind of for fun. Well, I bought some additional Google in my trading account. I then went out a year. So Google right today, I was doing it when it was trading at $141 a share. Since I did it today, I know where it was. I went out to next January's call options. So I'm going a full year out. The reason I do that is if I get taken on my calls, meaning if Google is trading above my strike price at expiration next January, that means I get taken and I have to sell 100 shares at that strike price for every call that I sell. So I went out a full year because then I have long-term capital gains on the stock and I don't have to worry about short-term capital gains and paying those higher percentages. So I sold the January 210 call for Google. If Google gets to 210 or above, I have to commit to selling as many 100 lot shares as calls that I sold. In this case, I did two. So I'm committing to selling 200 shares at $210 if Google is trading there or above. Well, since it's at 141, my thought process is, well, that's 25 or 30% return on the stock. And now I collected $400. It's only 1.5% or a little bit more of, in my mind, a dividend. I don't have to trade it. I don't have to overthink it. I just wait until next January. And if the stock is trading above 210, E-Trade is going to automatically take 200 shares from me and give me the proceeds of selling it at $210. Now, if Google is below 210 come next January, I still get to keep the money from writing those options. So they give me, I sold it at $2.10. So I got $420 less they charged 50 cents. So I got $419 today for selling those two options. And I get to keep that money. It's just like a dividend, no matter what happens with the stock. Well, from there, I just wait until next January. And like I said, if it's above 210, I've committed to selling 200 shares. Now, I did similar with Target, which also pays a dividend. In Google's case, it doesn't. So, Target, I was buying really well. I bought it like 108, 109 type of range. I sold next January, same thing, $210 call. Well, if Target goes up $100, I'm more than happy to sell 100 shares. And same thing, I did 200 shares of Target. And this is actually in my dividend portfolio because Target paid a good dividend at that price. And my thought is it's extra dividends. I have a little bit more shares than the two that I sold. So if it goes up to 300 and has an incredible year, I still have some shares left in the account because I want to own Target as well. But I sold two of them right around that same dollar ten, well, dollar, not two, dollar $10, dollar 15 range. So I collected an additional $200 in change, and that's essentially what Target pays out in a dividend. I think they pay $1.30 per quarter. So in my mind, I feel like I'm getting one extra dividend over the year. I'm getting a fifth dividend. And look, Target's already up to 140, so it's possible, and this is we still have a full year left, so it's possible I get taken on those options. But in the meantime, I'll collect all four dividends that they're going to distribute throughout this year, and if it's trading above 210, then I have to commit to selling 200 shares out of the ones that I have. Now, I really like this strategy because it allows me to collect some money, and I'm putting it at prices that I'm okay selling the stock even if it goes right through it. If it's stocks that I want to make sure I own forever, I don't do it with every share that I bought. I make sure to do it just with a percentage of the shares. Now, both of these stocks have really low volatility, so you're not getting a huge premium for them. At the same time, it is what it is, and I'm happy to sell them there if they get there in a year. So it's just one way to use an option strategy. I know a lot of people, and I use some of the others as well. Like I'll sell puts to get into positions. I'll sell shorter dated calls to get that extra premium and the time decay because it really falls off the last couple weeks. But that's not what I'm trying to talk about here because I don't really want to teach people to trade unless people want to learn to trade. Feel free to put in the comments if you want to learn to trade, and I'll talk about some of that stuff too. But I'm thinking for the long term investor, there's always companies that are discounted and values to buy. So if I get taken on a call on a stock that I wanted to keep, just means I look for a new stock that I think is a reasonable price when the time comes. Next January, I'll look around if I've gotten taken on a few things and see what looks like an opportunity to do something similar. And maybe I pick up a different company for cheap. Um, Anyway, let me know what you think. That's my thought on that. I've been seeing tons of gloom and doomers out there in terms of the housing market and the stock market. This is not financial advice, but my advice is I don't know that I'd be listening to them. I feel like we're going to have a few years like the mid 90s where the markets just keep going. I think people are underinvested. I think until they sit there until like I remember when towards the end of the 90s, like that's when I was trading at the exchange. Now I wasn't trading the stock futures; I was trading currency futures. But the S&Ps were downstairs, and I could see they'd open up lower a lot of days, but every day they were just higher and higher and higher until you have like 6 months of oh my god, this thing's just never going to go lower. and everybody starts jumping on board, and you hear, the doorman, the Uber driver, the waiter and the waitress talking about their stocks. Well, I think we just keep chugging along. And as long as there's gloom and doomers on YouTube telling me why we're going to keep collapsing because of the war in Israel and the war in the Ukraine and what's going on in the Red Sea, and China's going to go after, Taiwan, and like, I get these are real world problems that could explode into bigger issues, but as long as the companies continue chugging along and making profits, it's just going to be stuff in the background that keeps people nervous. I get the inflation issue too, and $1 trillion in credit card debt, but all of it's out there. It's not new information that anybody's not aware of. As long as Amazon continues to sell their products and people buy it, I think the stocks just continue to go. Anyway, one more time, don't forget to hit that subscribe button, hit the like button, make some comments, let me know what you think. And I'm also going to put a link in there for opening an account at SoFi. Like I've said in other videos, don't feel obligated to use that one, but I'd love to see people who aren't investing, if they would open an account somewhere and put in 50 bucks. Like, just get your feet wet and get comfortable with it. In the long run, it's good to save and be in a position where you don't stress as much. So have a great day. I'll probably talk to you tomorrow.